Hello everybody, welcome back. Let's have a look at Bitcoin and we'll work out, if we can, what's going to happen this weekend. Weekends are often a bit weird, when it comes to price action. It can be a bit unpredictable. But the chart, despite, I suppose, appearing to be volatile, which it is, and responding to outside forces like the CPI report and maybe potentially Russia, Ukraine and things like that, it's been a relatively tradable chart. I mean, the chart has told us entry points and also exit points and given us clues as to which way it wants to go. And it's worked out so well, so it's been a very tradable 2 weeks. It's been 2 weeks since we said there's going to be a breakout for Bitcoin. We got that. Then we got the breakout for altcoins last weekend, Sunday when we were on the live stream, we saw all that. And that worked out. So the market has actually been behaving itself despite the pump and dump, which again is something that we also predicted, exactly as expected, like Carl from the Moon would say. It has worked out exactly as expected, and it's not me. I'm not trying to take credit for it. It's Mr. Ichimoku Cloud, so the creator of that indicator, the use of moving averages, the expectation of dumping into a golden cross, and all this. So I can't take credit. If I was to sit here and read the Lord of the Rings trilogy to you, you wouldn't congratulate me on writing the book, would you? You wouldn't say, wow, how did you come up with that? And I'd say, well, I didn't come up with that. I just opened the book and I was just reading it. The words are there. That's what the indicators are. So this is textbook stuff that I've been doing here. It's not me guessing. It's not me holding any particular bias. It's me going, okay, that, and that, and this means this, and let's go for it, shall we? It's just, that's all it is. It's not me making any stuff up. I mean, it is the chart. That's just what the chart says. I read the chart. So yeah, it's worked out exactly as expected. But now what's happening is that it's pulling back exactly as expected. So we expected, not just for Bitcoin, but for all the altcoins that had these golden crosses, that we dumped down into them. Yeah, dump down is, I suppose, not an appropriate way of saying this, because maybe I'll leave a little insert, but it's on my Twitter anyway, because you have to boast about these things. I was expecting this to have a pump and then a dump and then just tailing off towards the end of the week, and that's working out. So that's what's happening, and it looks like we wanted to retest this area here, which is a pretty common occurrence after golden crosses. So golden crosses aren't particularly, a signal or a sign. This is what catches people out most of the time. Most of the people go, oh my god, a golden cross, let's long heavily, let's harvest my kidneys, go on 100x long, because this is bullish. The golden cross, oh my god. But all the golden crosses, it's usually the last signal of divergence on a longer term time frames on whatever chart you're looking at. In this case, it's the 4 hourly, suggesting, okay, we've got divergence on the longer term time frames. Maybe we'll have a sustained uptrend from here, and this is usually the case, right? It's usually the case. Same with the death crosses. Got death cross over here. It's not a signal in itself. You play that death cross, you'd be playing it down here. It had pumped up to it to retest it. No big bloody deal. Standard stuff. We had a few more retests of the 200 exponential before we dumped all the way down here and continued all the way down here. So I mean, it's nothing special. It's pretty standard stuff. I mean, I don't have a statistic because I don't know what Investopedia says about it, or if it even says anything about it. But in my experience, it happens more often than not. Very common, actually. I'd probably say it's probably in the 70% zone. It just happens so frequently that I come to expect it. So that's what we have in here. We're having a pullback down to the golden cross. And I think one of the main reasons you're looking for this is because you want to see if it's actually valid or not. Because sometimes they're not. Sometimes they're just not valid, Most of the time they are. Sometimes you'll have a golden cross followed by a death cross, followed by a golden cross, followed by a death cross, followed by a golden cross, and that speaks the language of accumulation, and moving averages end up basically meandering to the point where they all basically merge together, like similar to this. I mean, this is a 4 hourly chart, but they kind of all merge together, not really giving anyone a particular edge, which is why I use things like Itchy Cloud as well on top. Itchy Clouds are really good for spotting when you're going to come out of an accumulation phase, but yeah, an accumulation phase, when it comes to moving averages, it's really hard to work out what's going on, because they all basically start to blend together. I call it like the proton pack from Ghostbusters, when you're shooting those ghosts, and what comes out of their proton pack That's what the moving averages end up looking like, you know, and they give you no particular edge whatsoever. Anyway, we could be going into one of those, but for the moment we're in the first stages of retesting that golden cross, which is to pull back into it to see if we get a good response. Now, just below there is the CME gap between 41 and about 40,500. And if we go to the longer term time frames, I believe it was the daily, but I'll just double check it. Yeah, the daily, the center of the Bollinger Band is lurking down here at just below 40,000. So we're thinking about, you know, indicators, which is all I'm explaining here. I'm not suggesting we have to go to $1 million in the next 45 minutes. But, you know, maybe I could leave that as clickbait and, you know, just submit that nobody wants to know about TA. They just want some kind of encouragement. It's like having a lottery ticket, isn't it? I suppose for some people, they'll going onto YouTube in the morning and they just want to hear something good to start their day. But unfortunately, that's not what I'm doing here. I'm just telling you what the charts say. But on a chart basis, if you think about the Bollinger Band, it is moving up, which is good. We've got a positive tick on it, so it's pointing to which way it wants to go. And when you're above or below a Bollinger Band, you're 65% more likely to stay above it, which isn't the greatest stats, but it's still stats in your favours. So it still favours that we'll be in the upper portion. And as it's moving up, it's technically bullish because, you know, it's facing up. Every day that goes by, this will be higher and higher and higher. So that's good. So we've got lots of supports below us. We've got the 10 exponential, 21. We've got the CME gap. We've also got the center of the Bollinger Band. That's all good. That's fine. So it's working out exactly as expected. So back down to the 4 hourly, we can see that the Ichimoku cloud signal that we got here for continuation of trend came to an end. Which is fine, and you know, that's extra confirmed by the negative crossover here. This doesn't mean it's bearish. It just means that anyone that entered a long position or bought on that indicator is now, you know, it was time to get out. 12 hours ago. So that's fine. This is what the indicator does. This is why we like it. It gives us entry points, gives us exit points, you know, so we can play the charts, all right? That's all it's about. I see, you know, in times like this, it's amazing to see the comments that you get on YouTube. You know, some people are like, you, oh, and you're like, what's going on here? Remember, look, when it comes to reading a chart out, playing the chart, it has no bias. This is why I explain them. If I was just to wake up in the morning and just make a YouTube video and go, you know what, I got a pretty good feeling, guys, I think it's going to go up. That's how I feel. Just feel like that. In fact, I feel like it's going to go up to $100,000. You know, I'm pretty sure it's going to do that. You know why? Because I feel that way. That's not what I do here, is it? That's not what I do. Remember, trading is about stats. You know, it's about risk to reward. There's no definite involved in anything. There's some indicators which are more valuable than others, but at the end of the day, you know, there's a lot going on. First of all, on the chart and outside of the chart. But if you just use the chart the way it's supposed to be used, it's up to you if you want to take an opportunity based on the risk to reward. The risk to reward was relatively good when we were getting these signals down here, and again it was really good at the weekend, last weekend, when we noticed all those signals on altcoins. But at the moment, the risk to reward, you know, for any kind of potential opportunity isn't really great, because it's not going to give us buy signals like what we had last week and the week before. We don't have buy signals generated. What we do have is retesting of supports, and so that's for knife catchers. If you want to try that kind of thing, it's not buy signals like the ones that we had, right? So no buy signals. The buy signals that we had that were generated 2 weeks ago and for altcoins 1 week ago, they've played out. So anything is technically possible. We're looking to see if we're going to remain strong in some form of uptrend. And as we were basing all of these uptrends on a 4 hourly, if you base that on the indicators that we got, more or less we got the indicators were generated around this level. That was a 25% for Bitcoin. And we saw, obviously, after the live stream we did on Sunday, some of these altcoins we were most interested in, like XRP and VRA, they were given really strong signals on 4 hourlies. They did really big moves, didn't they? So again, I'm not sitting here claiming that I wrote Lord of the Rings. I'm just reading it to you. I don't even like Lord of the Rings. I don't know why I'm speaking about it, but you see what I mean, right? So at the moment, no buy signals, just retesting, coming down to retest moving averages to see if they're strong, because the CME gap is down here and it's a weekend. I don't want it to get tested over the weekend, although it could. So we've checked the daily, and we've recognised that the centre of the Bollinger Band has got a nice big uptick on it, and it's sitting around at 40,000. So there is that. If we come down to it, we'll go to quickly the 3-day. There's not a great deal to say on this, but similar to the daily, we do have the big RSI breakout, so that's good. We still have higher highs, higher lows on the money flow index, which is also good. We also have divergence here and a positive tick on the 3-daily MACD, which is also good. But what's not good, below the centre of the Bollinger Band. So you can see the higher term time frames that you go to from the 3-day and beyond aren't looking as particularly exciting. 65% more likely to stay in the portion of the Bollinger Band that you're in. 3-daily, we have to reclaim 42,000. That's what we have to do. We have to reclaim it, test it as support. Can we move from it? Otherwise, you're more likely to stay in it. So you can see that you flip the script the higher the turn time frames you go. So there are bullish things when it comes to momentum. Momentum suggests a difference. Also, that goes hand in hand with coming outside of this descending trend line. Momentum has changed. Momentum of the downwards spiral of consolidation has changed. We broke out of there. That's good. It's our first little retest of changing the behaviour. So we've got momentum change. We've also got chart structure change. But if you're taking it down to its very bare bones, we're still below the centre of the Bollinger Band here on a 3-daily. So that's unfortunate. And obviously, if you go to the weekly, the centre of the Bollinger Band here, the 20 weekly is actually at 51, and this is the major line in the sand. This is where we can actually, if we reclaim that level, and then we'll go, all right, finally, yes, we're back bullish again. We can talk bullish now, and Michael Saylor will start buying more, and who knows what will happen? Who knows what will happen? But until we reclaim $51,000 for Bitcoin, it is a battle of the lower term time frames, doing these scalpy little trades like what we've been doing these last couple of weeks. That's all it is, really. That's all you can really do. I mean, there's definitely trades to be had, as we've seen these last couple of weeks. But long-term positions, unless you're happy to hold for what could be, a potential bear market, which I don't think it is. You can't really say that it is, particularly at this stage. But if you're happy to buy things and hope for the best, then that's up to you. That's a different strategy. That's a hodl, and that would be based on fundamentals of things. But other than that, scalpy trades for altcoins. Bitcoin is slightly different. I don't see too much issue with holding any Bitcoin and buying Bitcoin, because there's one direction generally for Bitcoin, which is up. The only issue is going to be time. Right, so Bitcoin dominance now, and now we're talking change of behaviour here. So this is the first week now that we've not closed it yet, but it would appear that we will likely close it above the 20 weekly, and we've recognised for a long time now that the 20 weekly is a very, very decisive moving average. Probably the most important component to the Bitcoin dominance chart. So rejections all the way down here. Oh, rejections here. Can't take it. Rejection here. That hurts. And then we had a small change of behaviour when Bitcoin started to rally. Again, this is, it's fine. We had a retest of it here. Support, breakdown, rejection, rejection, rejection. Rejection, and so far we're above it. So it would appear that whichever direction the market takes, whether it's up, down or sideways, the altcoins on the whole are probably going to feel the pain, so have some sats drained out of them, for better, for worse. So if Bitcoin pulls back, altcoins pull back to a larger extent. If Bitcoin pumps, most altcoins will sort of drag behind it, and this goes hand in hand with what we've recognized on the charts, isn't it, really? So we looked at last week on the live streams where we were like, okay, all these altcoins are showing signals on a 4-hourly. They look like they're going to rally at the beginning of the week, which is exactly what they did, and then those rallies have finished, so it's reasonable to assume that they're going to pull back to a larger extent than Bitcoin, and that'll bring this Bitcoin dominance chart up, and that's what's going to happen here. So if we're thinking about this on a weekly, which seems to be the most relevant way to look at this, I would imagine that we do end up pushing all the way up to about 46% dominant, really, where we've got the top of the Bollinger Band here on the weekly. We've also got two major moving averages here, being the 50 and the 50 exponential. So that doesn't seem like much, but when you're dealing with a very large market cap like what we are right now, it could be pretty dramatic for altcoins. Some of these real shitty coins, proper shit coins, or coins that just are underperforming, or especially coins with bad looking charts, expect sats to come out of those. Doesn't mean that there's you should write them off completely, but if we're dealing with charts, which is what we're doing for short-term trades or whatever, then just be prepared for that. If your altcoin doesn't have a very good looking chart on Tether, and mostly on Bitcoin really, because this is the main way to trade those with the Bitcoin dominance, if the Tether pairing and the Bitcoin pairing looks pretty bearish, it will be bearish, whichever Bitcoin, whatever way Bitcoin wants to do. And whether you pick them up at what you would consider to be support, that's up to you, that's your call. I've been saying that we want altcoins to come down for a prolonged period of time, because that's where we get the best signals on the long term. So we do want them to go down further and stay low for longer, because that's where we get to pick them up when the time is right to do the 10, 20, 30, 40, 50 X's. That's how they generate. That's how we do them. That's how we did them at the beginning of last year. We watched them all come down. That's how we ended up doing them again, in the summer, because we were watching everything come down again. But the best ones are where we have a significant retracement for altcoins for a period of 3 months or more versus Bitcoin. That's where we get the best signals. So I welcome the pullbacks, and we look for opportunities. I've been saying that if there's no more madness going on in the world, which is hard in this world that we live in right now, then the only thing we really need to consider is the potential of a 50 basis point rate hike from the Fed, which I think the markets have largely priced in. If they say 50 basis points, we're probably going to get something like what we had the other day, which is a pump and a dump, or a dump and a pump, or we got a dump and a pump and a dump. We'll get volatility, basically, in a nutshell is what we'll have. And then once we've got clarity about what's actually going on, then charts can they can be traded. They can digest the information rather than speculating, which is basically what the markets have been doing this entire time. The markets have been driven down. This is just Bitcoin, but we've got stocks and all kinds of stuff all coming down like this. They're all doing the same thing, which is, I keep repeating it. It's why I don't think that this is a particularly scary time for Bitcoin, because it's not like 2018. I mean, it could end up being like that, but I don't think it is. I think it's been driven with the rest of the market. You look at any traditional market right now, major index, they're doing this basically. Some stocks are doing this and more. They're getting wrecked. Alts are getting wrecked. Bitcoin's holding up better than a lot of stocks, top stocks. So it's pretty interesting how it is performing in comparison to traditional stocks. It is definitely interesting, but yeah, what we need is clarity. That way the chart, we can digest all that information and work out what it's going to mean. And again, rather than banging on about inflation, because that seems to be what everybody talks about, I mean, essentially, I think we've priced in the majority of the pain, to be fair. Now, as we've seen, the charts are able to be played relatively well. The only thing we need now is clarity. Right, I'm going to leave it with you there. It was a long, drawn-out video. I hope you got enough time to watch it. Not that it's filled with, absolutely incredible information, but I would feel very grateful if everyone was to leave a nice comment. I know I asked everybody to call me a twat last time, which is fine. You can do that, but yeah, I mean, call me what you want, say what you want. It's all good for the algorithm. There's a lot of competitors out there, young, early 20s, good-looking, attractive crypto enthusiasts that are pretty much going to say anything to attract you to their channel. Unfortunately, that isn't me, but hopefully there's value in what I say, rather than an attractive face with hopium implied in the title. Right, I'll leave it with you there, guys. Hope you have a nice day. Take it easy.